Okay, I'm getting started now. Right. So last class we saw around 20 journal entries, right? How we go through a transaction. There are three steps to a transaction, right? We go ahead and right, steps in recording J journal entries. Guys, just please mute your mic so that we don't have any disturbance. Okay. Anybody has not done that yet, please do it. Right. So steps in recording journal entries. Step one, identify the ledger accounts involved. Right. Step two, classify the accounts into assets, liabilities, expenses, and income, and then debit debit or credit them based on increase or decrease movement. Okay. So, right. Does anybody have any doubts from last class's journal entries? In the 20 journal entries we saw in the last class, does anybody have any doubts in them or can I proceed? Now, I'm just getting started. If you have any doubts in the journal entries we passed in the last class, if you would like me to explain it again, just let me know which one and I can take another go at it. Yeah, good for you, Achit. Anybody else? With regard to your homework, we will, the thing is, even my last assignment I had given, the second assignment, I just wanted you to give a try for the entries you have, for the transactions you have created. After today's class, after we complete the rest of the journal entries I've prepared in my Excel, um, you guys can go ahead and complete your journal entries if your doubts are explained in this class. Else, today's assignment, after today's class is over, you will go ahead and submit your assignment, and then based on what each of you have, like the transaction and the journal entry, I'll just go through it and we can have individual calls to clear it up. That shouldn't be a problem. Okay. But as of now, let's just. I'm happy that you have no doubts from last class, so we'll go ahead and continue. Again, we'll definitely like come back to our individual doubts for your from individual your homework or your assignments. No worries about that. Okay. Let's get started for the current class. Right. So just so that you remember, and we have a reference here. Just keep the rules here, right? Rules as they are. So we have three steps, as I told, right? Identify the accounts, classify the accounts, and then debit credit based on increase decrease movement, right? So let's get started here again. Installation charges received rupees 50,000 via check, check not deposited in the bank. So here the first thing we notice is it's received. So we did not purchase a machine and spend money to install it. We have sold a machine or we have sold something and we have given an installation service to the customer and hence we have received money, right? So this is in fact an income. That's the first thing we understand. And we have received the check for it. We also know that we have not deposited the check in the bank yet. Okay, so it's simple to identify one of the accounts, which is installation service income, right? And this is an income account because I'm providing the service to my customer. I'm installing a machine for my customer and he is paying me for it. So it's an income, right? The second one, typically what would we do? We have received money and if we receive a check, we deposit it in the bank. So it will typically be SBI bank account. But the problem with this is we have been informed by this text that we have not deposited the check. So if I were to debit my bank account, that will imply that I have gone ahead and deposited the check. But if I look at my bank statement, I won't see the 50,000 rupees in the bank statement because I have not deposited the check yet. So instead, the corresponding account I have to debit is an account called checks in hand account. So this is an asset. So this account represents the checks I have received from customers and anybody else, and I am yet to deposit these checks in the bank. Okay. So at any point of time, this account will represent what checks I have lying in my office. So I have to send somebody to deposit these checks in the bank. So you can actually ask a question, why do I have to, waste my time creating an account called checks in hand? Why can't I'm anyway going to deposit in the bank. Why not just, go ahead and debit in the bank account? The problem is, say, for example, you've received a check right at, let's say your office closing time is 6 o'clock, evening, 6 p.m., and you receive a check at 5:45. If you were to pass a transaction bank account debit and income credit, you will, at the end of the day, close the account saying that you've deposited the check. So if you were to compare your books of accounts and your bank statement, there would be a mismatch. And also, the books of accounts will create an impression that you don't have a check with you in the office. It will create an impression that you have deposited the check. So to avoid this and to also have a control over what checks have been deposited and what not, what checks haven't been deposited, you go ahead and use this account. So this is more like a pass-through account. So on any good day, if you're done with all your transactions, this account will have a zero balance because nobody wants to have check in hand. They want to have the money in their bank account where they can spend it, right? So these two accounts. So this is an asset account because the check is an asset. It represents money. It represents the right to receive money. So it is an asset. So as usual, because I'm selling or because I'm providing a service, my income increases, right? So when income increases, you credit, and because I get money, my asset increases as well. So that's debit, and that's 50,000, right? And you can say being check received, check number, etc. Okay. So let's presume that the next day I'm depositing this check. So I know obviously that if I'm going to deposit a check, my bank balance is going to increase. So one of the accounts involved is my bank account, right? And if so, yesterday I had a check in my hand. Today I don't have a check anymore. So the check in account, which is an asset, the value of that asset reduces, right? So the next account involved is check in hand account, right? So this asset reduces, right? This account represented a check with a value of 50,000, and because that has been deposited in the bank, this account no longer has a value. So I'm reducing it for the value of 50,000, and the value is 50,000 because I'm depositing the check from the day before, right? And my bank balance increases because I'm depositing the check, which is going to be debited. So both of these are assets, right? So being a check deposited. Okay. This is probably something straightforward you can answer. Insurance expenses, and it's paid in cash account, right? This is an expense account. This is an asset account, right? I'm paying cash, my asset reduces, you credit. I'm incurring an expense, my expense increases, you debit, and the value is 10,000, right? So maybe you can mention the policy number, maturity period, right? If you maybe have some sort of document referencing system, document reference number, right? Say you have a file in your office and you have a file for, say, maintaining your insurance contracts, and you have a file number XYZ, whatever, X25, blah, blah, blah. Sure, I'll get back to that, yes. Um, so typically you have these files, but you need to know which file to refer to so that you can locate the document. So that's something that you use. Okay, I'm back to transactions 21 and 22. Do you have a doubt, Vandana? Okay, great. Water expenses. I think it's a similar transaction. Water expenses account, and I'm paying with check, so SBI bank account. Okay. Guys, to understand one thing, sometimes you might get a confusion. Maybe if you have this confusion, I'm just letting you know. See, I paid with check. I don't know whether the person I gave the check to has deposited it yet. So it won't reflect in my bank statement as a as a reduction in value. So should I create another account called checks given account? So don't do that. We don't do that because according to our concept, right, our business, as long as we've paid somebody money, we go ahead and reduce it from our bank balance. The reason we have a check in hand account is to keep track of checks we have received. So, say in our office, we have 15 checks in our office locker. So, to know that I have 15 checks and to have a control over that, to have a control over what I have received and what I have deposited, we have an account which represents that balance. But I don't need to have a control over what checks I have given because I know that they're anyway going to go ahead and deposit the money. I mean, they're going to deposit the check, which means that I'm going to, like lose money or money. My bank account is going to be debited. So don't think about or don't confuse yourself with an account where checks given account, nothing like that. As soon as I give somebody a check, as soon as I'm paying money to somebody, my bank account should reduce. As in your books of accounts, this bank account should reduce, the value should reduce. Okay. So I think this is similar. One is an expense and one is an asset. And expense increases, my bank balance reduces, and that's 64250, right? And you can go ahead and type the narration, right? Internet, telephone expenses, 5,000 paid in cash. So let's say that, okay, let's make this interesting. I'll make this internet expenses rupees 2,000, right? And this is 5,000 paid in cash. So how many accounts are involved in this transaction? You have an account which represents the telephone bill you paid, an account which represents internet expenses, and the cash account. So there are three accounts that are involved in this transaction. So you have telephone expenses account, you have internet charges account, and you have cash account. Again, I'm reminding you, it's these are not. There is no right answer. If you are confused, you should not think that if I create an account called internet expenses, it is wrong. There is no right answer. The account name should represent what the account represents. That's it. So don't get too hung up on what exact name should be there. There are some companies which simply create an account called communication expenses account and go ahead and debit 7,000 to it. So this is where if you remember, there was a concept called materiality, right? So there are some businesses where my communication expenses in total will be maybe 1% or lesser than 1% of my profit. So it doesn't make sense for me to create telephone expenses, internet expenses, mobile expenses. It doesn't make sense for me to create multiple accounts and monitor them. I'll simply create one account called communication expenses and account all these such expenses under that one account. But for us to have practice here, let's presume that each of these balances are important. So I'm creating three accounts, right? So these two are expense accounts, right? And this is an asset account. So let's keep it simple. So cash, I know that I'm paying money, so my cash reduces. As it reduces, credit, and that's 5,000. Sorry, 5,000 plus 2,000. Right? I'm paying a total of 7,000 rupees here. And these two are expenses. My expenses increase, so I debit them. And the corresponding debit values are 2,000, right? And 5,000. So now if you see this, the debit and the credit matches. So this is what I meant when I said a journal entry should balance at the end of the day. You can maybe have even 20 accounts that are involved in one transaction. Here we have three accounts. There is no rule that there should only be a certain number of accounts which are involved in a transaction in a journal entry. There can be 100 accounts for all you care. But at the end of the day, all the debits and all the credits should match. If they are not matching, you have done something wrong. You've improperly applied a rule, or you've selected an incorrect account, or you've identified or classified an account in an incorrect way. Probably an asset as a liability or vice versa. Okay, right? Okay. Income taxes payable. So let me stop right now and ask whether you have any doubts as of now. If you have doubts, type something out. If you can't type it out, just say that you're coming, you're unmuting and asking a question and go ahead. Any doubts as of now? Okay, let's continue. Now, we have to understand how income taxes work. So guys, just pay a little attention. We'll understand both how income taxes and GST work. Okay, so let's go back to theory, right? Income tax accounting. Okay. So I'll just give you a very basic idea about how the Indian government and the income tax works. So income taxes are levied by the government based on the Income Tax Act 1961, and we have income tax rules 1962, right? So I'll put it this way. So income tax, there are two ideas, okay? One is, let's say for you are in, so right now we are in financial year 2020-21. That means that, so what is today's date? Today is 22nd April, right? So we have begun the financial year 1st April 2020. We've started that. So the end of this financial year, the financial year we are in right now, is 31st March 2021. Okay. So the income tax rules and the Income Tax Act works in three stages. You have something called advance tax, that is, tax you pay in advance for the income you expect to earn in the current financial year. Okay. And then you have something called tax deducted at source, right? Or collected at source, right? Which is tax the person who has to pay you some money has deducted tax before paying. I'll explain each and every one of these, don't worry. And something called self-assessment tax. So that this is the tax you pay after the financial year, after you know how much income you have actually earned. Okay, so let's try to understand what advance tax is. So let us say, so have started the financial year, and financial year 2019-20, I earned rupees 25 lakhs. Okay, so I expect that in financial year 2020-21, I'll earn rupees 30 lakhs. Okay, so this is an expectation. You expect that this is what you will be earning. So what you have to do is, let's presume that tax rate is 30%. Okay, it is a presumption. There are multiple tax rates. Don't worry about it. Let's say it is 30%. You have to pay 30% of 30 lakhs. Sorry, right, which is 9 lakhs in installments during the current year. Okay, so what will the transaction be? Paying in advance tax rupees. Let's say that I'm paying 5 lakhs first. Okay, in cash. So what is the transaction here? I know that one of them is cash account, and the second is something called advance tax account. Okay. So cash account represents an asset, right? And advance tax account also represents an asset. So why is an advance tax account an asset? This account represents the money I have paid to the government, right? So as of now, I have to pay the government 9 lakhs and I have paid the government 5 lakhs. So 5 lakhs worth of my money is with the government, right? So that's the way you look at it. Don't get too confused. Just go along with what I'm saying. Pay attention, and what you need to know, you will eventually know. Don't worry about it, right? So what do? You go ahead and debit here and credit here, and let's say it's 5 lakhs, right? 5 lakhs debit and 5 lakhs credit. That is, try to understand advanced tax. Second, we learn what is tax deducted at source. Let us say that you have, let's say that you have received a service from somebody. You have received some sort of technical service. Technical services received from X Limited, rupees 9 lakhs. Let's make it 10 lakhs, right? TDS deducted at 10%. Let's say, let us call it 9 lakhs, okay? So, okay, I'm providing my services, okay? So, this is based on money that you have to receive, provided to, right? I'm providing technical services to X Limited, and TDS is deducted at 10%. So, let's for now ignore this TDS part. So, what would the standard transaction be? I'm providing a service. You're not able to hear me. Just a second. Are the others able to hear me? Vandana, what about now? Are you able to hear me? Okay, just a second. How about now? Can you still hear me? Guys, can you still hear me? Okay, awesome. Let's go ahead. So, typically when I provide services, so I'm providing services, so it is an income for me. The money I will be receiving is an income for me, right? So, say technical service income, which is an income, right? So this transaction is not telling me that I've received the money yet. So I have to receive it from somebody. So I'm providing to X Limited. So X Limited becomes my debtor. A debtor is somebody who owes you money. He is an asset, right? So you debit and you credit, and the transaction is worth 10 lakhs, right? Right. So there are certain types of services, okay, where when you provide them and the customer is paying you, the Income Tax Act requires them to withhold some amount that they have to pay you. Okay. So technical service is one such service where say I'm the business, I'm providing a service to X Limited, right? So my income is 10 lakhs. So which means what I'm saying is I have to receive 10 lakhs from X Limited. But what is the government saying? The government is saying you shouldn't receive 10 lakhs, right? I'm going to take 10% from 10 lakhs, which is 1 lakh, and the government will take the 1 lakh. The government will say Mr. X should withhold 1 lakh from the payment and only pay 9 lakhs, right? So if we let's now try to account the same transaction with this new understanding. So we have these two accounts for sure, right? Let's actually just, it's pretty much the same transaction. I know this is correct. So this is perfectly fine, right? So I can color this in green. Right, this is correct. But I should only receive 9 lakhs from this fellow. As in tomorrow, X Limited will pay me in cash or check only 9 lakhs. So now if you notice, it's not balancing. I need 1 lakh more worth of debits, right? So if I do that, then my account is balanced. So I have 10 lakhs here and 10 lakhs here. So there is 1 lakh worth of debit that I should assign to an account. So in this case, if you notice, I said there's an account called advanced tax account. Similarly, we create an account called TDS receivable account because this is money you should have received, right? So, and if you guessed it right, this is also an asset. So both advanced tax here and TDS receivable here, both of these accounts are asset accounts. Okay. And self-assessment tax, you don't need to worry about it as of now. So what I'm trying to say is, if you're paying tax, and if the question mentions advanced tax or TDS, know that because you're receiving lesser money from the customer himself, you have to receive this money back from the government, right? Because both of these are guesswork. You're not paying tax for the exact money that you have earned here. This is all just guesswork. At the end of the financial year, for the year ended 31st March 2021, you will finally calculate how much money you have actually earned. You will calculate how much tax you have to actually pay. So let's presume that profit for year ended 31st March. So for the period, right? Period 1st April 2020 to 31st March 2021 is, let's say, 50 lakhs. I've actually made a lot more profit. No, let's make it easier. We actually reduce it. Now, I've only made 25 lakhs. Right? I expected to make 30 lakhs profit, right? But I only made 25 lakhs. So what is the income tax I owe? 30%, right? 30% of 25 lakhs is 7.5 lakhs. But what is the value of taxes I have already paid, right? So we have TDS receivable, which is the tax that has been deducted by your customer and paid to the government for you, right? He is doing your job for you. And this is advanced tax, right? Advanced tax, we have a balance of 5 lakhs, right? And this is a balance of 1 lakh. So you've paid a total of 6 lakhs tax already, right? You paid 5 lakhs when you kind of figured out that you have to pay 9 lakhs in total. You would have eventually paid 9 lakhs, the balance 3 lakhs will balance 4 lakhs as well, right? You paid 5 lakhs, you would have paid the balance 4 lakhs at some point of time. Let's just, for the sake of example, say I paid 5 lakhs then, and my customer paid 1 lakh for me. He had to pay me 10 lakhs. He paid me directly 9 lakhs and paid the government 1 lakh for me. Okay. So I have to pay 7.5 lakhs. I've already paid 6 lakhs. Tax amount due is, you guessed it right, 1.5 lakhs. You only pay 1.5 lakhs balance. So this is a very, what you might call a crude idea, but don't worry too much. As of now, all you need to know is there is something called advance tax, where you pay income tax in advance for the income you expect to earn during the financial year, right? And you have TDS receivable, which is income tax deducted for you by your customer or by anyone who has to pay you, and he pays the government instead of you, right? A portion of what he owes you is paid by him to the government. That's the idea. So let's now go to income taxes payable. This is the next transaction, right? Income taxes payable 50,000. Now, there is there are two things we have to figure out. First, what are the accounts involved? I know that income tax is an expense, right? A tax is an expense. I'm incurring it in order to do my business. the government requires me to pay taxes. If I pay taxes, the government lets me do my business. So income tax is an expense. Income tax expense, right? And in tax payable. Let's just create an account. So we create an expense account and we create a liability account. So if this transaction told me income tax paid in cash rupees 50,000, I will mention cash account here because I know my cash is reduced. But as of now, they're telling me that I just have to pay, right? So I know I have an expense. My expense is increasing, so I know I should debit it. Correspondingly, I have a liability. I have to pay my tax. And liability is when the enterprise owes somebody money, has an obligation at a future point of time, right? So when my liability increases, so I credit it. So I'm just creating the name, based on what I feel. You can also create income tax liability account. It's not a mistake. As I said, the name is not important. What it represents is important. 50,000 and 50,000. So when income tax is paid, I'll go ahead and create income tax payable account. I know that the account is involved. And let's say this is in check, right? So this is a liability account. This is a cash. This is an asset. So my liability reduces because I had to pay 50,000 before and I'm paying it now. So my liability is reducing. And when a liability reduces, you debit. And when your asset reduces because you're paying money, you credit, right? And it's the same value as before. So this example doesn't really help you use or try to exercise what you learned here. I will like introduce new journal entries later on where you kind of try how to account these as well. So this is more like I will I'll teach you this again, don't worry. But as of now, just try to understand that this is how income tax works. Okay, income tax paid and being income IT payable. Okay. So donation made to X charitable trust via check. Okay. So let's maybe try to do a small poll here. Okay. I'm saying that there are three accounts involved here: donation account, X charitable trust account, and bank account. How many of you agree with me? Okay. Number of accounts involved. Don't mind the spelling. Two accounts, three, and I'll just give you two options. Okay. I'm creating the code. What the hell happened? Yeah. Okay, I'll go back again. Just tell this. I'm saying there are three accounts involved: donation account, X charitable trust account, and bank account. Come on, time's running. Okay, most of you seem to figure out that it's two accounts instead of three. Let me explain it. Okay, so what is this transaction telling me? It's telling me that I'm making a donation. I'm giving a check to somebody, right? So what is the transaction here? There's this charitable trust, and my business is a good business. I want to help the society. I want to give back. So I'm donating some money to charity, right? So what do I know for sure? I know that my bank balance is going to reduce. So SBI bank account, I know, right? It's an asset, and it's going to reduce because I'm paying money. So when asset reduces, it's credited. 25,000. I need to debit something in order to complete this transaction. So what am I doing? I'm giving money, which means I have to debit. It makes sense for me to debit either an asset account or an expense account. So I'm making a donation, right? A donation is not an asset, right? I don't get any benefits from donation. It's not an economic resource. I'm doing it so that my business will be good. No, because I'm making donations, people will, my users will think, okay, this is a good company. They give back. So a donation is an expense. Donation expenses, right? And it's an expense account, and you debit it, and that's how it goes. Those of you who thought that there are three accounts involved, you might have been confused because there's X charitable trust, and why is that not an account? Why X charitable trust is not involved in this journal entry is, as far as we are concerned, we are paying X charitable trust, which we can, if you want, you can mention it in our narration. Gave donation to X charitable trust. But as far as the journal entry is concerned, I want to instruct my accountant what to do. I want to say which accounts are involved and what happened. I know my bank balance reduced, so I'm crediting the bank account. I know I incurred an expense, so I'm debiting the expense account. So the question gives me information about the charitable trust. I don't need it to record my transaction. So there may be cases where you'll be confused. They'll give you names, they'll give you an address, whatever. They might give you information which will mislead you to, like overthink the transaction. Don't overthink. Be very straightforward, and at the end of the day, understand what the business is doing, right? It makes sense for me to think how a business works, right? I'm paying the donation and it's an expense. I end it up. That's where it ends. Okay, let's get started. Let's go ahead. Paid 5 lakhs for advocate in pending case against us in check. Okay, this is again simple. I know check, so SBI bank account. No, same concept, right? It's an asset. I'm paying somebody, my asset reduces, so I'm crediting it, and the value is 5 lakh, right? I'm debiting something called legal expenses. This is an expense account, right? Here you might be confused. Why not advocate account? Why is it not an asset? See, when you are paying somebody legal fees, right? You are paying legal fees for an opinion or for services that they're providing to you, right? What does a lawyer do for you? Maybe he writes up a contract for you. Maybe he vets a contract for you. So vetting a contract is basically, say, for example, you have a supplier or a customer, or you want to get into a deal with somebody, and they're giving you the terms and conditions, and you are not a legal expert. You want to know whether these terms and conditions are favorable to you, whether you have any exposure, whether they could get you in trouble, or whether you can get into trouble because of the terms and conditions. So to understand what exactly the contents of the contract are, you ask a lawyer or an advocate or a legal expert to go through the to go through the contract and tell you what it means, whether you have problems, whether the contract represents your true intentions of the business transaction. Right? You don't want a legal document to not represent what exactly the intention is that you're entering into a transaction with. So that's what you call vetting the contract. Vetting is VTTI, if you're interested in that. Okay. So you are getting a service. So you can't, like save a service. You can't store a service. A service is something that happens simultaneously. While they provide the service, you receive the service. It ends therein. So you can't say a legal expense or something legal is an asset. A service can only be an expense. You incur it, you use it simultaneously, and it's gone. Okay. So legal expenses, I'm incurring expenses, debited 5 lakhs. Okay. So you can mention what case and stuff like that. So now, okay, turns out we won the case, right? So one case against us, rupees 6.7 lakhs compensation for filing the wrong case against us, payable to us by Gentle Limited. Okay. What do we understand? Let's think of it like a set of facts. So we won a case. That very fact, it just gives me a piece of information. It doesn't give me a number. Okay, I have to receive compensation. So now I have something that I have to receive, and the value is 6.7 lakhs. And have I received it yet? No. It is payable to me. I have not received it yet. Who has to pay me? Gentle Limited. Okay. So there are two. So I have to identify which accounts are involved. So now there is a party who owes me, right? And what do we call him? We call him a debtor. A debtor is somebody who owes us, right? So Gentle Limited. So this is a sort of case where a debtor is not just somebody who you have made a sale to. A debtor is anybody who owes you money. Okay. So Gentle Limited is a debtor who is an asset, right? And the second is uh, you can call it compensation. You can call it, let's say that we have the thing is to be able to say exactly what, to be able to properly represent the account. Let us say this was an information lawsuit. Okay, an information lawsuit is where somebody is saying that your company did bad things and you prove them wrong, and because they said such bad things about your company is affected. So they are required to pay you compensation for the bad name that they've tried to spread against you. So compensation for infamous, I don't know what it's called. Damn it. Um, let's say infamity lawsuit. I, I can't recollect the exact word for it. Lawsuit. But again, the name doesn't matter. What it represents matters. Okay, compensation account. So this is an income, right? So an income doesn't just have to be a sale or any interest income such. Income is any benefit that the company receives, which it can attribute to its profit. Okay. So here it has received money or it is going to receive money and is going to benefit because of that. So that is an income. Okay. So my income is increasing now because of this receivable I have. So income increases, I credit, and my debtor increases. That is the amount that he has to pay to me is now 5 lakhs when it was, sorry, 6.7 lakhs when it was zero before. So that the asset increases as well. So you debit asset when it increases, credit income when it increases, and you mention the value, right? Being again lawsuit one. Any doubts as of now? Yeah, go ahead. Yeah, go ahead. Yeah.
Hey, can you hear me?
Yeah, I can hear you. Go on.
Yeah. So, you just said that. Can we go to the Excel sheet, please? Yeah. So you just said that the money didn't come to us yet, right?
Uh-huh.
Then how can it be an income if it didn't come yet?
Interesting question. So, that's where we have something called the concept of accrual. Okay. If I think I might have mentioned it in the as part of one of these. Okay. Um, you see this rule here. One of the aspects is revenue recognition, right?
I do.
Huh? And you can club that with conservatism. Okay.
Okay.
So you can take both of these concepts. So what am I saying? Say let us presume that until yesterday the case was going on, and the lawyers were very positive, and they're saying that we're definitely going to win this case. There is no way that we have done a mistake, and it's a granted thing. The only thing that's left is the judge to give a ruling. Okay. Today I have won the case, and the judge has passed an order.
Okay.
So you can if I had recorded this transaction yesterday, because I know that I'm going to win the transaction. So I'm sorry, I'm going to win the lawsuit. It would be wrong because I have no legal right to receive the money from him yesterday. Correct?
Okay.
Because
Okay.
just because it's common fact that, or like it's common knowledge that I'm going to win the lawsuit,
Mm.
it doesn't establish a legal right that the law and the government and the constitution is giving me to receive the money. Just because I know doesn't mean I can.
Okay.
Okay. But today, the judge has passed an order, which an order is passed by the court, right? And it has a legal power to it, which
Okay.
is telling me that you have a right to receive 6.7 lakhs from the
Dental Limited.
plaintiff.
Okay.
So now, because we have a legal right, we have to go ahead and record that right in the books.
Okay.
So let's put it this way: if I did not record this transaction today, okay,
Okay.
and let us presume that today is 31st March 2020.
Today is 31st
And
March 30. Okay.
I'm saying basically the end of the year. So I
I
prepared the
understand.
books of account and I give it to my investors. They wouldn't
Okay.
know that I have won the case. They wouldn't know that I have this money receivable from Gentle Limited. So it is receivable as of 31st March.
Yeah.
Right. So the moment the order is passed, the right to receive is established. So this is where I was trying to explain the concept of there is a right and there is a receipt. So when I make a sale, right?
Mm.
So you can actually compare this with the question you might have asked earlier. I have made the sale. I have not received the money yet. So how can I record the sale? You
Mm.
just because you know not received the money doesn't mean that you have not made the sale. You
Mm.
have to split the transaction. There are things called rights that you have, and
Okay.
the right leads you to receive something or receive a benefit.
Okay.
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 And this can be in a different way. For example, let us say the compensation is not something that you receive as cash.
Mm.
Let us say the compensation is maybe they have to buy us a new machinery.
Oh, okay.
Even then, this is the same transaction because I'm getting a benefit, and the income need not be just in cash. An income
Okay.
is basically a benefit I'm getting.
Okay.
And this transaction simply establishes the fact that I have a right to receive. That's it. You don't even need to complete the sentence saying right to receive cash or check or whatever. I have a right to receive. That's it.
Okay.
So,
So, it's like consider it done kind of a thing, right?
I'm sorry?
Is it
Precisely.
consider it done?
Consider it done. Yeah, that aspect of it is done.
Sure.
Cool.
Yeah. Sure.
Awesome. Any other doubts, guys? Anybody else? Okay. Shall I go forward? I'm going ahead. Okay. I think hopefully. Okay. Just give me one moment. So there's just one more concept that I have to two more concepts that I have to explain here. Okay. So what I will do is I will rearrange these transactions so that I can explain the easy ones first, right? So we won't have too much to worry about. Yeah. Oops. Yeah. Yeah. Okay. Invested rupees 4 lakhs in a 10% fixed deposit with Bank of India. So let us say uh, deposit uh, check, gave a check. So I took money from my SBI account and I invested it. I put the money in a fixed deposit with Bank of India. So what happens? Let's go from the easy to the relatively confusing part. So I know that my bank balance is going to reduce. SBI bank account, it's an asset, right? I'm paying money from my bank account, which means it's going to reduce. So asset reduces, you credit it. What happens is a new asset is created. The asset created is a fixed deposit, right? A fixed deposit is an account. I can even call it 10% BOI fixed deposit, right? And it's also an asset because I'm going to be receiving interest in the future from the asset. And I've also received the 4 lakhs at a future point of time once it matures. So it's an asset I hold with me. And the asset is increasing, it's getting created from zero value, it becomes 4 lakhs. So asset increases, you debit and 4 lakhs, right? So here you can mention you can mention the FD number, maturity date, any others, whatever details you want. So basically that's it. Shouldn't be a problem. Okay. Next is rent payable on building. So now I'm getting the. I believe we purchase a building before? No, I don't think we purchased. We are already renting a building, but we have not paid rent yet. We just paid rental deposit, if you remember. So we paid it with a check when we paid it through NEFT. So I have a rental deposit. So rental deposits, fixed deposits. So what's the difference? A fixed deposit is with a bank. A rental deposit with just the landlord. I get interest here. I don't get interest with rent deposits. Both of them at the end of the day are refundable. I'm going to receive both of them back, right? So I have what you might call a right over it, a right to receive it back. Okay, just giving you just a small point of view, just to help. Okay. So in this transaction, we had paid an advance, a rental deposit for it, and in the transaction we are going to see now below, we are paying rent for the first time, or at least we are saying it is payable. So when do you say something is payable? Let's say that I have to pay rent on the second of every month. Okay. And 1 month, instead of paying on second, I'm paying on fifth. So you know that as of second, on the second of say April or second of May, the rent is payable. So you have a liability. So on second, you have to record a transaction which represents the liability to, in this case, JF Realtors. Right? That's why you pass this entry. So here what happens? You're incurring an expense. Rent is an expense, right? You rent a building to run your business, and the cost of business is called an expense. Rent expense account and rent payable account. Because I've not paid it yet, it's a liability. And this is an expense. So this I have to pay in the future. It's an obligation the enterprise has to pay at a future point of time. Yeah, it meets the definition. So liability increases, so credit. My expense increases, debit, and 55,000. So as of second, I have established and accounted the fact that I owe somebody some money. So why this is important is this represents a concept called accrual. Okay, I will explain this concept in detail in probably next class if I'm not mistaken. Okay, but the idea behind it is there are two types of accounting, two methods. Okay, there is a cash basis of accounting. Cash basis, accrual basis. So cash basis is account as you receive pay. Accrual basis account as you are owed. In easier English, account as you get a right to receive or have obligation to pay. Okay, a very simple example is, let's say Mr. X accounts on cash basis. Okay, so the rules are rent rupees 10,000, payable on every second of every month. Okay, sorry, on second of every month, paid on. So for the month for March 2020, I have to pay on 2nd April, right? Paid on 5th April. Let's continue the same example. If I'm accounting on a cash basis, right? On 2nd April, right? 2/4/20, no journal entries passed. On 5/4/20, I'll pass very simple transaction, rent expense. I'm incurring an expense and I'm paying, let's say I'm paying with cash, right? So don't confuse it with cash basis because I'm using the word cash basis. It's not cash. It can also be bank. Don't confuse that, right? So expense increases, you debit, right? Let's say how much? 10,000, right? And bank, my balance reduces because I'm giving a check, and that's also 10,000. So this is cash basis, which means you pay as you count as you receive or pay. Okay. The problem with this is Let us say you're showing an investor your books as of 2nd April, right? You know that by the rules of business, you owe somebody rupees 10,000. You owe the rent guy, your landlord, rupees 10,000 on 2nd April. But your books of accounts won't represent this transaction, right? So if you were to consider the cash basis of accounting, it won't represent the correct profit. It won't represent, because the thing is, you have received the benefit of, like occupation of the premises for March, right? So as of 31st March, you have used the benefit of that place, of the premises, to conduct business and make profit, make sales, and you are supposed to record the liability that you have as on that particular date, so that you represent a proper profit. If you have, the idea behind accrual or behind cash basis is that in cash basis you try to account very simply. You don't think about what is, when do I owe anything, what I owe. You don't think about such complicated questions. You simply think about, okay, I'm paying today, my cash is going out, I account. I'm receiving today, my cash is coming in, I account. That's all you think. It's a very rudimentary form of thinking. Let us say the same thing Mr. X accounts on accrual basis. Okay, which means he respects the rules of business, and he will go ahead and show that on 2nd April he owes rent, right? So on 2nd April, you can see that he has created a liability, and he says, yes, on 2nd April, I have to pay somebody, and I'm incurring the expense on 2nd April, and I have a liability to pay as of 2nd April. And on 5th, what you do, you go ahead and pay, and the liability reduces. You had to pay 10,000 and you're going ahead and paying it, because liability reduces, you debit. Okay. So that's the difference behind an accrual system and a cash system. Now, the next question, which is the right way? The cash system is not the right way. The accrual system is the right way, because the accrual method of accounting is what represents the correct profit. That is, the expense I've incurred to conduct business for a period will be accounted in the same period. So when we come to profit and loss account and balance sheet, you will be able to appreciate this better. But as of now, just understand that this is the simple rule. Okay. So if you understand this, you understand the concept. So if you account based on what right you have and what obligation you have, it's accrual. If you don't care about all that, you just care about what goes in and comes out, it's cash. Okay. So here we are accounting based on the accrual concept. Right? So we have a liability as of that date of 55,000. So we account that. And eventually when we pay the rent, I know that my cash is going to reduce, right? Asset reduces. I'm paying 55,000. Right? And rent payable, which was my liability, because I'm paying the liability, it's reducing. And when a liability reduces, you debit a liability, and that's done. And again, just mention your narrations here. Okay. Received interest on fixed deposit for 9 months. Right. So let's go to, so that's all we haven't received any information about what value we've received, nothing. We just know we've received some money, and this is received, guys. Don't confuse again with, have a right to receive. The transaction says I've received the money. Okay. And I'm receiving interest. So let's try to establish facts one by one. A, I'm receiving interest on fixed deposit. Interest here, it's an income for me, right? Because I've given money to somebody, and because I've given them money, they are giving me a consideration. They're giving me interest. It's income. And when I have income, my income increases, and when it increases, I credit. That's one. Second is, right, interest on income. This is an income. It increases, right? And when income increases, credit it. And obviously, no bank is going to give me cash as interest. That we are investing. Yeah, actually, we have mentioned it in this transaction, number 31, right? we have mentioned the fact that we have deposited. Okay. So the thing is, this would have been maybe a slightly easier idea if I had mentioned dates, but that would be hard to track. So I'm just giving numbers here, but I've mentioned that 9 months have passed. We know that now, right? So after 9 months, they're giving me interest. Okay. So so no bank will give you cash. Okay. They will directly credit it to your bank account. That's like I'm just giving you information about the business is done. Does anybody have a doubt? Actually, if you look at it, we don't need to say anything because I'll try to explain this way. Here, I'm naming the account 10% Bank of India fixed deposit account, right? So I know that this account balance represents the fixed deposit I have with Bank of India. And it also gives me the information about what is the rate of interest I'm going to get from this fixed deposit. So this is the information I want to know from this account, right? And I've named the account such that I could have also just named it fixed deposit, right? I'm going to the pains of naming it Bank of India 10% fixed deposit so that the account name gives me as much information as possible. So tomorrow, say I open three more accounts with three different banks, three different interest rates. And it makes perfect sense for me to create, say, let's say it's called a 6% Axis Bank fixed deposit, 2%, that's stupid, sorry, 12% Bank of Baroda fixed deposit. The account name will tell me which bank I'm receiving the interest from or which bank I made a deposit in. However, when I'm receiving income, I don't need to worry about where I'm receiving it from, right? All I'm worried about is this interest is something I'm receiving from a fixed deposit. I'm not because when I'm concerned about the fact that I'm receiving income, I'm not going to look at the interest rate. I'm not going to look at where I'm going to get it from. That information I will know from my debit. That is, obviously, I'm going to be debiting my SBI bank account here because I'm receiving cash in my current account. Because when you receive money as interest, you won't. Okay, I'll have to explain another idea. Some of you may know it. Have you guys heard of the word compounding? Right? Let's interest payments, interest received on fixed deposit. Right? Typically, you have two options. Right? You have option one is to receive the money for spending. Okay. So what do? You deposit money, right? Receive interest in your current account. So when you receive the interest, you have money in your current account and you can spend your money for your business, right? But remember that when you deposited money in a fixed deposit, you can't spend that money. So if you have a 4 lakh deposit with Bank of India, you can't spend that 4 lakh. Say you have to purchase something, you can't use that money for the purchase. However, you can spend the interest you have received in your current account. The second option is um, compound the fixed deposit. What does this mean? Say I'm making a fixed deposit of rupees 1 lakh, right? Interest at 10%. So year zero, that is today. Okay, year zero represents today. Deposit amount is 1 lakh, right? So at the end of year zero, which is year one, right? 1 year from now, the deposit amount is 1 lakh, right? But the thing is, I've also received interest, which is 10,000, 10%, right? Which is going to be added to my fixed deposit. So I won't receive this money in my current account. What they'll do is they will add it back to my fixed deposit. Okay. So For the second year, I will receive interest for year 2. Let's make it year. Excuse me. So interest for year 2 is 10% of 1,10,000, which means I'll receive 11% because when I gave them 1 lakh, they had to pay me 10% on 1 lakh which they had, right? Which means at the end of year 1, they had to pay me 1 lakh, which was the initial deposit value, and 10,000, which is the interest. But I told them, guys, don't pay me the interest now. You keep that interest also, and you use it. And next year, when you pay interest, pay me for the new value, which is the 1 lakh I had already given you, plus the 10,000 which you had to give me, but you I asked you to keep it with yourself, right? So at the end of year 2, right, 2 years from beginning, compounded annually. I'm not sure whether you guys learned that in class, and I'm sorry, it's too old. It's been a long time. If you understand the meaning of compounding, yeah, perfect, right? That's all there is. So yeah, that's perfect. And if you guys know what that is, then I actually wasted 3 minutes now explaining it. Sorry about that. But that's the idea behind compounding. And you have different types of compounding because you mentioned the word annually. You have monthly compounding. You have you don't have weekly. You have monthly, half yearly, quarterly, annually. Okay, and that basically means how many times a year you are applying the interest. So here I'm just saying I received the money. So there's no compounding here. I'm receiving it in my bank account, current account, and my bank balance increases, asset increases. I think if you've gone through the motions, I'm hopefully, like I'm hopeful that you've started to get an idea about how this goes. Okay. So now I know what the transaction is, but what is the value? Okay. I have information about so let's try it out. It's 4 lakhs. So it's 10% interest rate for 9 months. Can you guys give me the answer? You can type it out. Four lakhs, 10%, 9 months. Okay, I'll give you the numbers. Rupees 4 lakh, right? 10%, 9 months. What is the interest amount I should receive? Any ideas? Shouldn't be that hard. If you've learned compounding, this should be very basic for you. Okay, I'll go ahead and answer that. Don't worry. Okay, shouldn't be fine. Okay, so what do I know? It's rupees 4 lakhs, right? Interest for 1 year, which is 12 months, is 10% of 4 lakhs, right? என்னடா 53.333 compound எதுவுமே பண்ணல bro. All we're doing is 4 lakhs we deposited for 12 months and I'm receiving interest at 10%. That's what I said, right? Interest at 10% here. Yeah. So for 12 months, if I'm supposed to receive interest of rupees 40,000, which is 10%, for 9 months, I should receive 40,000 into 9 by 12, which is 30,000.
Wait, I'm not typing anything. Why is it saying I'm typing?
We good?
Yeah, I got it. I got it. Thanks.
Guys, do you understand this? Or would you like me to explain again? Anybody? Sure, no problem. Okay, let's take it step by step. What is the first thing I know? I know that. Let's start like at the beginning, okay? So I have excess money with me. I don't want it to chumma sit in my bank account. I'm giving it to the bank. I'm making a fixed deposit. The amount is 4 lakhs. Interest is 10%. I will. You can presume that it's a it's a 1 year deposit or whatever. But I'll even give you the information. No problem. Deposit interest deposit for 2 years. I'm just giving you the information. Don't worry. Okay. So the fact is, I have a fixed deposit for 4 lakhs, and the interest rate is 10%. So when somebody gives you an interest rate, it means that it's interest rate per annum. Okay. So you don't have to mention the fact that it's PA. The question doesn't have to give you that information. The moment you say it's a 10% fixed deposit, what you need to understand is I get 10% every 12 months, every annum, per annum. Okay. If you've not heard of the word, it's per annum, every year. Okay, that's the term. So I'm first creating an asset. I'm reducing my bank balance. It's fine. Don't worry. It happens to me all the time. Right. So now the transaction is I'm receiving interest on the fixed deposit, and I'm receiving it for a value of 9 months. Okay. So there are two things I have to do. First, I have to figure out what is the journal entry, and the second is I have to figure out what is the value of the journal entry. Right? We did the easier thing first. I know that interest is income, right? Interest on fixed deposit. We decided that we don't need to mention the bank name or anything, because as long as it's income, I'm not really interested in knowing which account, which bank it is from, because I get that information from my bank, fixed deposit account name. I don't need that information. So interest income increases because I'm receiving income. So when income increases, you credit the account, and I'm going to receive that money in my bank account, and my bank balance increases, and as my asset increases, I debit it. So both the rules have been applied. The journal entry format has been established. Next, I know that I have a deposit for 4 lakhs, point A. The interest rate for 12 months per annum is 10%, that's point B, which means for 12 months, the interest receivable is 40,000, 10% of 4 lakhs. If for 12 months I have to receive 40,000, then for 9 months, I do a calculation 40,000 into 9 by 12. Okay, which means for 9 months, the interest I will be receiving is 30,000 rupees. So if you want to even go take a step further, is for 3 months, balance 3 months. Logically speaking, it should be 40,000 minus 30,000, or you can also do the same calculation, 40,000 into 3 by 12, 3 months out of 12, it's 10,000. Okay, here we are receiving for 9 months. So I get 30,000 in my bank account, and income is 30,000. Are we clear? Andana, did you get it? Awesome. Okay, let's go ahead. Okay. Okay, I'll just ask you guys, because we are actually going past time now. Is it possible for, you know what, we'll actually just take this up in the next class. There are 3 concepts here, that's it. We just have interest on loans, right? Don't take in. We have to introduce what depreciation is, and we understand how to account for GST. That's it. These are just niches. Okay. So we've covered the majority type of transactions we have. We've seen so many types of transactions, right? We've seen how to invest in the business. We've seen how to purchase assets, right? We've seen how to pay advances, rental advance, fixed deposits, purchasing machinery, which means getting an asset, purchasing inventory, raw materials, how that goes, how to pay salary, how to account for different types of materials, right? How to owe somebody, as in how to create liabilities, how to create assets. We've almost covered about 70% of the average accounting day, right? So I think this should enable you to finish your assignments. Okay, so we'll close for today, right? think typically our classes go for 1 hour 15 minutes. So I don't want to extend it any further, guys. Don't worry. Right. Check out I'll just update the assignments. I'll obviously update the class and the recording on YouTube. If anybody wants to go through the class again, you can check it out on YouTube. YouTube link will be there in the classroom. The Excel will be there in the classroom. Ensure that you complete your assignments and you can submit it by tomorrow night so that I have a chance to go through them and I'll maybe be able to point out something interesting that you've done, any common mistakes that we've all gone through, and hopefully we'll continue and finish the balance journal entries on Friday, and we will start with what is ledger accounting. Okay, that will be a bit more interesting. Maybe it will start slowly giving you a form to all of this. Any doubts as of now? Okay, then I think I can close up for today. Okay, thanks guys, thanks for watching. If you have any doubts during the next day or two, you can obviously text me on WhatsApp or call me. Thank you, Archit, thanks a lot. Sure. Okay, if you hopefully from last class, if you followed the assignments, you would have completed a little bit of your journal entries. Hopefully you'll be able to complete the rest of it today or tomorrow if you're feeling lazy today. So submit it and we'll see how we've gone through on Friday. Okay, thanks for watching. Bye guys, see you on Friday. Okay, logging out.